All right, everybody. Stocks by the numbers. Welcome back. Let's get into it. So I wanted to do a broad. I know I'm coming to you. It's Friday after the market's closed, but just a couple of things I wanted to look at here today, and potentially just keep in the front of your mind going into next week, the next couple of weeks. But I wanted to look at Intel Corporation, ticker symbol INTC, listed here on the NASDAQ. Obviously, a company everyone's familiar with. Is a company that makes processors, been around for quite some time. And the stock recently took a hit, as you see. This is about a 3-month chart. You can see earnings came out the end of April. And the company actually kind of turned around the EPS side. They've been beating analyst expectations for the profitability side, and we can see that this is actually the first slight miss on revenue in a couple of quarters for Intel. So I feel like, in my opinion, they have kind of started to begin that rebound phase that we're in, and now the revenue's starting to come in. They fixed the profitability again. They're coming in above EPS expectations. So in my opinion, I do believe the stock is slowly going to rebound, and not trying to predict too much, but it looks like now, not to discuss politics, it looks like maybe more people are leaning towards Trump. So I just want to remind everyone that under Trump, when he came in and he was talking about reinvesting into America and, putting America first and all that, one of the very first companies I remember to come out was Intel, who said that they were going to now reinvest a couple of $1 billion back into a facility here in the States. I don't know if you guys remember that, but at the time, again, they were one of the first ones to come out talking about that kind of reinvestment back into America. And the stock was holding pretty steady at the time and was gaining a lot of attention and a lot more momentum based on those future projects. Not necessarily in that kind of here and now at the time, even though revenue was kind of hit and miss, right? But overall, the stock was kind of getting beaten up. We're talking about a company that was up in the high 40s, 50s a share. Then again, after missing on the revenue, they beat it up. They brought it all the way down to new lows here, sub 30, 29.73. Now, since then, we can see during this month so far, pretty much in July, the stock has kind of bottomed out. It was bouncing around. These are some support trend lines here that I had drawn out. I was mentioning some key levels to watch, in my opinion, in the Discord. Again, Discord link in the description of every video, free for you guys to join. And what happened was, now we started to begin our climb. And I just want to point out just a couple of trend lines that I'm watching here, because the stock, again, technically just went from 30 to about 34.5, 35. So very nice rebound here of almost 15% just in the last couple of weeks. So this first trend line is going across the bottoms as we were kind of at the apex of flatness and then began our climb up. And you can see that this is going from the lows, looks like June 26th of 24, cutting across to July 2nd of 2024. And that's just going across. So technically we were bouncing off of that trend line, right? Then we had a big pop up, looks like it bull flagged, and then boom, it gapped up even higher. So right now, this is kind of like the longer term resistance, even though it only happened a couple of weeks ago, right? Now, after the gap up, we can see that if we go from the bottom, and you can see it continue to run up to that fib and then come down to retest this lower fib and actually bouncing right off of the 20-day as well. And then it had a nice bounce. But you can see now if we connect those lows, that's from this Monday, the 8th, to the pullback yesterday on the 11th. And you can see that's cutting across the bottom there. So in my opinion, this is kind of like the immediate short-term kind of traders trend line, that if we come down and retest and then bounce, right, and close above it, then technically we're still in this bullish phase. If we happen to come down, bounce around, maybe reject off of this resistance trend line I'll get to in a second, and then we break down and close below this trend line, then in my opinion we technically should have the gap fill back to where we popped and potentially a retest back here to this longer term resistance. If we were hypothetically to bounce and close above, we can potentially keep heading upward over time. And if we came down and closed below it, technically we would break the upward momentum, close below support level, and potentially come back down to where we started or retest our all-time support trend line. I know that was a lot, but I like to try to explain, what a lot of these lines mean and what I'm personally watching. So if we back up even further, let's look at the resistance here. Yeah, we'll do a one-year chart for now. And we can see, first of all, this is our kind of top line resistance. And this is going back to December 27th, 23, cutting across, connecting to the top of January 25th, 2024. You can see that's cutting across, right? So that's like the all-time, well, not really all-time. That's the longer-term top line resistance level. So we can easily run up here to the low 40s and then reject and come back down here to the mid 30s and hang out there for a while. Or, obviously, if good news keeps coming out and we beat earnings maybe once or twice, we'll eventually come up, potentially close above this line, and then we'll maybe regain momentum and try to retest the high 40s to the 50s. But right now, that's my top trend line resistance level that I'm watching. Then I go from the next previous high on January 25th, 24, cutting down across to April 1st, 2024, and that's this second level of resistance here. And now if we look at the third high on April 1st, 24, cutting down, you can see that if we zoom in a little further, right, I come down and I connected to that high that was just recently hit, basically where it stopped and had that big drop, which was early morning yesterday. And you can see that cutting across, especially if we expand out. Look at the 1 month. You can see that's right where the body stops. You can see that's right where it paused and then it bounced around. You can see the up and down. And then we came down. Look at that retest right there. And then we ended up breaking and closing below it, obviously. But it looks like that is now our resistance level in the shorter term that we have to keep an eye on. So technically we closed below it, which means we really shouldn't, pop up and open and continue to climb like that, in my opinion. We should technically continue to drop a little bit and either retest the 20-day moving average as it comes up, or potentially come down, retest this line at about 33 and 70, and then maybe bounce and kind of stay in this range for a little bit. But technically, if we look at the most recent news that came out, it was technically a miss on the revenue side. So what we can potentially see is coming out of this kind of triangle, and then we could see the rejection for the gap fill, but then over time we can continue to climb up. Because in my opinion, in the numbers, I actually think it's undervalued, and I think making a case for a run back up to the high 30s or potentially like that 40 plus psychological level is actually feasible in my opinion. But stock closed here at about 34.5, up 3% on the day. We have a market cap, 147 billion, we'll call it. We're getting paid a dividend, even though they cut it a little bit. We're still yielding about 1.5% at this level. We're trading 35 times earnings, which based on kind of how tech has been running, we got the NASDAQ now well above 20K. I honestly didn't think it would happen under this administration, but we'll put that to the side. But 35 PE, not that bad. But then again, the revenue has kind of been mixed. So it's understandable that it's not trading at a 50 PE, right? I'm sure we can agree on that. But the EPS has been solid, as we see, 4 quarters in a row, looking good. The annual revenue dropped down hard coming out of those lockdowns, and we can see that we were almost at 80 billion, and we dropped down to 60 and then 54. So it looks like, again, they're making the rebound, and I believe for 2024, they're forecasting maybe like 56 billion or something like that. So it looks like the revenue is going to slowly start coming back in over the next 1, 2, 3 years for Intel, which is why I'm saying if this is the quote-unquote bottom and we are in the rebound phase and we are going to potentially see earnings beats more times than not, then we can maybe turn around, 6, 8 months from now, and we could be looking at a $45 stock that today is trading sub 35 and recently got beat up, right? That's why I wanted to make the video. But net margin obviously dropped down hard. I mean, you lost almost, 20 billion in revenue, so it definitely takes a hit. And we can see net margin closed out at about 3% for the year. But looking year over year here, I know Q1 seems to be their lightest quarter, but if we look comparing it to Q1 of last year, it actually looks like it's really trending in the right direction here. I mean, 11.72 billion this time last year, they're up to 12.72 billion. So billion in revenue growth year over year. Not that bad, especially for a company that is kind of supposedly, kind of getting beaten up and maybe forgotten about, right? Left behind. We can see also they lost 2.75 billion. Net margin minus 23.5%. Now we fast forward. On only a billion more revenue, they only lost 380 million. So this is why I'm saying they kind of started to get these losses in check, and that's why the EPS has been steadily coming in above estimates as well. And we can see that technically they should have lost, like 1.5 billion if we're staying with the same margins. But obviously they improved and they only lost 381 million. Net margin percentage about minus 3%. So if we look at straight up the revenue to market cap comparison, 54 billion, market cap 146. So we're trading a little less than 3 times annual revenue, which isn't really too crazy for a company like Intel. But if we switch over, let's try to find our quote-unquote fair value, the way I look at it. And we can see dividend got cut down. The debt has been rising. This time last year, 50.25 billion. Now we're up to almost 52.5 billion. Free cash flow was minus 9.2 billion. Now it's minus 7.2 billion. So this is why a couple of these metrics moving in the right direction. Cash on hand still about 7 billion. We do have assets still outweighing liabilities in both the short and the long term. But let's look at some numbers here on the income statement. One thing that I noticed, look at this, 11.72 billion, right? This is Q1 this time last year. 11.72 billion, cost 7.71. Now we're at 12.72 billion, cost 7.5, generating a billion more revenue and actually cutting the cost of goods sold. And, this is what companies have to do from time to time. Because remember, when everything's going great and everything's going your way, even if it's not 100% efficient, you're probably just going to stay the course and kind of keep doing what you're doing. It's only when something unfortunate happens, a sale doesn't go through, who pulled their contract and went to a competitor, right? It's only when something like that happens that all of a sudden now the revenue starts coming in light, and then that starts eating away at the profitability, and now all of a sudden that segment of our business is struggling, so now we have to do some restructuring and we have to start cutting costs, right? I mean, it's almost the way a lot of people live their lives as well in general. Right? A lot of people maybe aren't going to take care of a problem or, tackle a dilemma until it really, immediately affects them, and then they're going to take action. So it's kind of that similar mentality with some of these publicly traded stocks as well. And that's why I'm saying I think Intel, I don't want to say completely saw the error of its ways, but is now potentially, trying to climb out of it. But the fact that a billion more revenue on lower cost of goods, I thought was a pretty good sign. You can see even gross profit this time last year, 4 billion. Now we're up to almost 5.25 billion. So a lot of these numbers moving in the right direction. Total assets slowly climbing up. Looks like the liabilities, they were a little bit higher. Technically it's up quarter over quarter, but it's kind of been maintaining like those low 80s for about a year and change. And we can see total assets minus total liabilities yields total equity. And we can see total equity now above 110 billion. Book value per share slightly ticked down a handful of cents, but it's holding those high 24s. And obviously was coming from 23.5 and the low 24s. So now we're almost back at 25. So we're only trading 1.3 times book. But again, it's because people saw that the revenue started chunking down and then it was kind of hit and miss. So, until they completely prove everyone wrong, so to speak, and really start beating analyst expectations and annihilating earnings and, getting upgraded price target lifts, until that starts happening, a lot of people aren't going to jump ship. But remember, when it does happen, you're going to have the initial pop, potentially driving this up to 37, 38. Then people are going to pile in, which may potentially climb it up to 39, 40. Then the positive catalysts are going to come out, which is going to potentially climb it up to 42, 42.5, $44 a share. And we're looking at it today at 34. That's why I wanted to make this video. But let's run through some of these numbers real quick. We can see the PE obviously was down, then it was not existent, was up above 100, and has kind of slowly been coming back down in check. It was, I think, down at like 30, maybe right sub 30. And that's what I mean with a market raging and a brand name company like this in the rebound phase. The fact that it was trading with potentially 29, 30 PE could be viewed as undervalued. So some people went PE hunting and, rode that wave back up. Price to sales now sitting at about 2.5. We were up to almost 4 times sales. So the stock that last quarter, again, slight miss on revenue, kind of taking a breather, now beginning the potential rebound phase. Price to cash flow at one point was up to over 18.5 times cash flow. Now we're only trading about 11.8 times cash flow. Price to book was up about 2 times book. It never really got overextended. But now you can see we had a big pullback. Now we're only trading about 1.33 times book. So even if we slowly climb back up to 1.5, 1.6 times book, that's obviously going to translate to some potential quick profits. The enterprise value supposedly is what another company would be willing to pay for it, 178.5 billion. That's about 30 billion more in value from where we're currently trading, which is about 1/5 or 20% on a $35 stock is roughly 7 points, which would bring us to about 41.5, potentially $42 a share. But again, this is just one metric, not always something to go by, but just thought I'd mention it. All of our return percentages dropped down negative and are now slowly ticking higher here, 2%, 4%, 2.7%. And you can see this time last year, gross margin percentage, yeah, technically it's not the best it's been, right? We just came off of almost 46%. They post 41%. But at the same time, this time last year, 34.2%. Now it's up to 41%. So this is what I mean. They're starting this rebound phase, right? And this is what could potentially be a good investment that we've mentioned on this channel before. You look for a brand name company that's been beaten up, been battered down, and then as they start to steer the ship back in the right direction, you catch that rebound phase. If you're doing options, you make sure you buy yourself a little bit of time, right? Catch that rebound, boom, book those solid profits. If you're able to buy shares, obviously it's that more advantageous in my opinion for the long term. But operating margin, we can see this time last year, minus 12%. Now we're up to minus 5.6%. After coming off of positive where it was negative as well. So this is why, in my opinion, a lot of this is looking pretty attractive right now. This time last year, EBITDA, again, earnings before interest, taxes, depreciation, amortization. We can see 8.2%. Now it's about 14.33%. So what is that? It's like a 66% move from, oh no, wait, a 75% move, excuse me, 6 points off of 8 is 14. Net margin percentage was minus 23.5%. Now it's minus 3%. Right? We looked at that earlier. They lost 2.76 billion. Now off of only a billion more, you would think they would lose about 1.6 billion, but they didn't. They only lost 380 million last quarter. Inventory turnover technically slightly down, basically flat over the last couple of quarters. Asset turnover basically flat as well. The debt, yeah, is basically kind of holding steady. So our debt ratio is slowly climbing over the quarters. And if we look at recent earnings, we can see how we were kind of mixed. One hit, one miss. We're kind of mixed. What's going on? And then all of a sudden, 5 EPS beats in a row. And we had 4 revenue beats in a row. And then a very slight miss just a couple of weeks back. So this is why I'm saying now, if you were to kind of predict next quarter, oh, they're estimating 12.98, oh, they're going to post above 13 billion. I would actually probably give them the benefit of the doubt. And we can also see that on the profitability side, which we know is something Wall Street salivates over, and if you consistently keep increasing your profits, they'll consistently keep increasing your share price. But we can see that the EPS comes all the way down here, estimated next quarter for 11 cents a share. But more importantly, whether that hits or misses, look at what's going to potentially be coming for the next couple of quarters, jumping up almost 200% to 32 cents and then almost 50 cents a share, and then holding that mid-high 30-cent range. So this is why I feel the rebound could potentially be coming, and we can see that we were down to 11.7 billion in Q1 23, 12.7 billion Q1 24. Look at what's forecasted for Q1 of 25. Almost 14.7 billion. So we went from here to a 1 billion revenue jump, and now we're looking for potentially 2 billion more in revenue coming in year over year now from Q1 24 to Q1 25. So this is why I say, in my opinion, this could potentially become exciting. But I was originally looking at the fair value. And of course, I just continued talking about the stock and went off on a tangent like I do. But total equity here, 110.76 billion. If we look at last year's revenue, we're at about 54 and a quarter, we'll call it. So if we add this to that, we're at 164, we're 165, we'll call it. All right, we're at 165. Total debt right now, 52 and a half. That brings us down to 113, 112, 112 and a half billion. 112 and a half billion. We come back here, we have 7 billion, 119 and a half billion, in my opinion, is my personal fair value for Intel Corporation. And as you see, the market cap's only like 20, 25 billion above that mark. So we're technically trading, well, in my opinion anyway, we're trading like 1.2-ish times fair value, which again could be viewed as undervalued potentially. And even if we bring that up to maybe 1.4, 1.5 times valuation, we'd be looking at, potentially 170, 180 billion market cap, which again would bring us to $40+ technically. So in my opinion, that is kind of the realistic value of Intel. But of course, we know it all comes back down to earnings. But if we are in this rebound phase, we can see that we have earnings coming out just in a couple of weeks, estimated here for August 1st. I'm not sure if that's confirmed, but probably around that time. And we can see EPS 11.2 cents a share on revenue of just a tad below 13 billion, 12.98 billion. And this time last year, the company brought in 12.95 billion. So really what we're seeing is, if we're just going to be maintaining that level of business now in about 3 weeks when we report earnings. And I think that, again, we could bounce around, we could gap fill maybe, and then we can, gain some momentum with earnings coming out. And if everything does go according to plan, then technically we should see at least this mid-resistance level, in my opinion, of about 37.5, which is about a 3-point move from where we are today, which isn't too bad. Let's look at stock charts real quick. I'll let you go because I definitely went on for way too long. We can see the MACD steadily climbing, even though the stock was flattening out, Bollinger Bands tightening up, and then boom, we had our big run up and our big climb happening here throughout the month of July. RSI was drastically sub 30. Traders start piling in. This is what I mean. A situation like this, right? If this happens and then you see the flatness taking place, in my opinion, if you're able to buy 3, 4, 6 months worth of time on call options, and then as it remains flat, you come back 2-3 weeks later, let's just say those options are down like 30% because nothing happened. You have to keep in mind, first of all, if you had high conviction on the trade and you truly believe it's going to happen, and it can happen, then you have to kind of stay the course, right? You have to stay disciplined. Don't see that you're down 20-30%. Oh no, should I just cut it and take the loss? Like, relax, you bought 4 months worth of time. It's been 2 weeks. You know what I mean? But also at the same time, if you have that high conviction, in my opinion, if you continue to see this flattening out, this tightening of the Bollinger Bands, and maybe it can happen in the next couple of weeks, but nothing's kind of happened yet, and it's boring, that is when a lot of people get bored and they jump ship. And in my opinion, that's when you should stay the course. And if now what you felt was a great trade back here with some time that was maybe kind of inevitably going to happen, right? You had high conviction on it. Now 3 weeks, 4 weeks later, if those options are down 20-30%, you should view that, in my opinion, as an opportunity to accumulate options, build a position, and potentially lower the cost basis. Now, of course, you're not supposed to put all your eggs in one basket. Technically, the financial rule used to be about 10%. Used to be the 10% rule. You shouldn't put more than 10% of your account in any one position. But I'm sure you guys can appreciate what I'm saying here. If you bought options with some time, let's just say you paid $200 each, right? Now all of a sudden here, nothing's happened. You still have 3-4 months worth of time, but now they're worth, $160 each. In my opinion, that is an opportunity that should not be viewed as a negative. And now you can see that as the climb happened, right? You're probably sitting pretty, and the stock barely moved and is potentially just beginning. But we can see we were riding high, popping out of the top Bollinger Bands, right? Again, the tightening of the B bands. And I said when that happens, you usually see a big break up or down. The stock chose up. And you can see that we spiked up, and now we're kind of just channeling down. We looked at those trend lines before, and we can potentially kind of hang out in this range for a day or two, and then maybe pop and get back up to 35 plus again and start to climb back up with that momentum going into earnings. But you can see that the RSI did top out, got above that 70 benchmark, had that dip down, looks like to about 60, and now climb back up today, up almost 3%, getting to about 67. So we can potentially keep going, right? Even if we look here on the 1 day, you can see, right, we technically slightly came and closed below this resistance trend line. So if we come down mid-range, we could drop to the low 34s, then we can maybe bounce and try to immediately come back up to about 34 3/4 and retest that trend line. So this is why, in my opinion, it looks like the mid Bollinger Band now is going to start climbing up, and that's why I feel like we may have a slight break where we retest the mid Bollinger Band, we retest that 20-day moving average maybe, and then it bounces and gains momentum going into earnings. But we'll see, only time will tell. Switching over here on the weekly, the one thing going for it is on the longer term time frame, we can see RSI still sub 50. And we can see we had the big drop, the flattening, and now we're curling. And the mid Bollinger Band was 35 even. Stock got up to almost 35.5 and then pulled back, now closed at 34.49. So technically below the mid Bollinger Band, slight rejection. But this Bollinger Band, remember, now that it was coming down and the stock is coming up, now we're going to potentially start curling, flattening out, and now rising back up with it, right? So it might kind of follow along that mid Bollinger Band going into earnings, and then if they beat, we see that pop maybe 37, or this moving average potentially 50-day here 38.10. But you can also see the MACD was falling completely straight down, and you can see we bottomed out, we started to curl back up, now we're right at the meat. So this is why if we happen to spike up to like 36 plus Monday, I would actually understand that as well. Because on the daily, you might be overbought, but on the weekly longer term time frame, it's still looking juicy. Now it's looking more attractive if we get that MACD to cross on the longer term time frame. We might potentially see 37, 38 and a retest back to the moving average going into earnings even. But we'll see. Only time will tell. Let's check the pivot points real quick. I mean, I made a 30-minute video. Might as well just check the pivot points. And we can see 32.5 basically was the big support level, and you can see it rejected off of it about 3 times over the last several months. This is the weekly, and obviously this week we chunk up and get well above it. Next stop could potentially be about 38, that moving average. On the daily too, you can see because we were flattened out for so long, as we started to run up, we had the initial spike up, which rejected right at that top resistance level, 32.34, and then we just popped right above it and have been bouncing around since then. Looks like a potential retest of that previous resistance level. Let me see. Yeah, looking like maybe 33.70, and you can see that it spiked up here on this day and came down right to that point. Look at the low, 33.72, and then it spiked up the next day, right? Came down, tried to break below it, and then spiked back up above it. And it looks like we stopped right there also at this previous pivot point of, yeah, about 35 1/3 and change, supposedly. What was our high? 35.22. Yeah, actually, it looks a little higher than that. It looks like about 35.30. And you can see we had that big spike up above it today, and then that big rejection coming back down. So that's why, again, we can potentially kind of consolidate, maybe gap fill, and then run back higher. Or with that MACD now crossing on the weekly time frame, we may potentially just continue to run. And we also have our 200-day moving average here in the 38s on the daily. So the stock could very well get to 38 going into earnings and potentially off of a good report. And only time will tell. But any of you guys down here, obviously, who bought that those lows of sub 30 or got in here at 30, 31 and change as it started to climb, congratulations, well done. And essentially, you utilize the Buffett method right there, where we speak about looking at brand name stocks, keeping an eye on these brand name companies as they get beaten up and battered down and start trading at these lows or the lower end of the 52-week range. That's when you step in and you are now buying a brand name company at a potential fair or discounted value, and now you're just waiting for the rebound, eliminating some of the guesswork. And that's why I say, if you can find these positions and you have the capital to buy shares or get in some calls with a lot of time on them, this is why I say, in my opinion, you're eliminating a lot of the guesswork. You're eliminating a lot of that potential anxiety and that stress, and you're just kind of waiting for it to head in your direction and go green for you. And then there you go. You can book your profits when and where you want to. So in my opinion, I do like Intel at these levels, and we'll keep an eye on it, and we'll check back in as we approach earnings and see what the company reports. But that's pretty much it. So I'm going to end it there. What was that, like 40 minutes? You're welcome. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for your time. Enjoy your weekend.